can see a 5-year-old kid can look at that and say, that's not going up, is it? You know, the peaks of the bounces are getting lower. And I simply get a ruler and a pencil, draw a line across the tops of those peaks. Now, how you draw that is very critical. Many people ask me where I learned all the information for trading. As I said, I've been involved in the market for 23 years. I've studied some of the most successful traders in the world. But this particular information I developed over about a 6-year period. But the accuracy is extremely important. Where you start, how many points you touch, and the mathematical tolerance. And that's what I teach people in my home study course. How to do that so they get a consistent, profitable result every time they trade the market.
I, like a lot of people, before I did the basics course, was a complete novice. In my profession, I have no contact with financial things, so I didn't know much about it. I mean, I was a complete rank amateur when it came to dealing with the stock market. So the basics course changed all that completely as far as I was concerned. It just took someone who knew virtually nothing and made them into an educated investor. The tapes are fabulous. They are so logical, ordered and easy to follow that anyone who has no prior knowledge of the stock market could quite happily go through it and wind up being very knowledgeable compared to the average person. They're very, very impressive. Without any hesitation, that they should do it, because I cannot imagine that you could find a better course with better support and more relevant information than is offered by Trading Edge.
So very simply, do not buy or own the stock when it's trading below that. As you can see, it goes up, hits it, falls down, goes up, hits it, falls down, and continues to fall. So if you don't buy it when it's below it, when should you buy it? Well, it makes sense to me. You wait for it to cross above. And the longer it remains above that, the less risk you have of losing money. Now, I don't want to buy it when it's gone way up. I want to make some of that profit. So I want to buy it as close as possible to here when the probability of me making money is greater than the risk of losing it. And that's what I do. See, at that point in time, once it goes above that a certain length of time and remains above there, it has at least 6 out of 10 chances of continuing to rise. So I buy the stock because I know I have a greater chance of making money than losing money. See, the stock market is actually a business of mathematical probability. For most people, it's gambling because they buy a stock and do not know what the probability of making money is. Then the next question is, when do you sell? If you buy the stock and it starts to go up and you start making money, when do you sell? Well, people say, well, I think I should sell, and then we get greedy, don't we? I think I should sell, 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 I knew I should have, I knew I should have, I knew I should have, all the way back down the bottom.
It started off with my mum and stepdad doing it, and then they stopped. And the videos came up, but David did the workshop and got these basics on video, and we done that and applied it to the market and found that it was unreal. and we thought, well, if this works and it's like this price and this price for the advanced is so much more, and there's going to be so much more benefits and so much more to learn. So we've done that. I'd say it'd be the best thing you could ever do. Like, before knowing this sort of strategies in the market, just like everybody else, and you don't want to be like everybody else. Everyone else is just tagging along to other people and not getting anywhere, so these strategies really help.
And they go from short-term traders to long-term investors. And most people I talk to have stocks they should have sold a long time ago. Knowing when to sell is just as easy as knowing when to buy. See, when a stock's going up, we say it's in an uptrend. Doesn't mean to say it's going up all the time, but it's going up most of the time. And by definition, the troughs must be getting higher with each bounce. It's like a ball bouncing up a hill. Very simply, those bottoms are getting higher with each bounce. See, this is not rocket science. And very simply, we can draw a line along the bottoms of those bounces, those troughs, and it's called an uptrend line. Whatever the stock remains above that, we have no risk of losing money. However, when it falls below, the risk starts to increase. And the longer it remains below that, the greater the risk is of it continuing to go down. And so I sell. Back to this chart. We said we do not own or buy the stock while it's trading below that. We wait for it to cross above it, and as I said, it's got to be a certain length of time, it's going to remain above that, and that's when I buy. Because I know the probability of it going up is greater than the risk of it going down. For me, it's got to be at least 6 out of 10. And then it starts to rise. I own the stock and I watch it. And I'm watching to see if these bottoms are getting higher. And once I see that, I draw a line connecting those together. While the stock remains above that, I don't sell. When it falls below, I believe the risk gets too high to hold it any longer. And so I sell it. See, by buying and holding stocks, what happens, you just watch it go up and you watch it go down, you watch it go up, and you don't maximize your return on your profit in the market. The stock market is different than real estate. You need to understand how to maximize your return. I never try and buy at the very bottom. That's too high a risk. So you never know where the bottom is until after it's gone up, do you? So I buy when it's safe to buy. I don't try and sell at the top because I don't have a crystal ball. No one knows where the top is until after it's gone down. I sell when the risk becomes too high to hold it. And so my goal is to make 60 to 70% of the rise of all the quality stocks. Here's another example. You can see that very simply, every one of these vertical black lines is a price movement for a period of time. And you can see this stock is going down. I get a ruler and a pencil and I draw a line like that. You don't need any sort of complex or expensive computer software to do this. There's people that will try and sell you software at $5, $10, $15, $20,000, supposedly to pick the stock for you. Firstly, I've not seen any of those work successfully over a period of time. And secondly, you can go to a newsagent, buy a ruler and a pencil for about 70 cents and make more money if you know how to drive the ruler.
The basic course, it just gave you everything that I've spent 3 years and $30,000 to find out the hard way. I went to one group which cost me $10,000 and I ended up buying a black box, which I wasn't happy about. So move on from that, and I then went to one of these very loud, noisy presenters with lots of hype and very hard to learn anything. And I then found another guy that was dealing mainly in options and traded options. Lost a lot of money with that. So yeah, I wish I'd have found David 3 years ago instead of just within the last 6 months.
Very simply, you do not own or buy the stock while it's trading below that. As it continues to rise, I simply draw a line underneath. And I hold it while it remains above that, but when it crosses below, I sell. See, that particular rise there was over 300% profit in 2.5 years. Not bad. Not all rises last for that long. This next one, just based on the same information, was just on 30% in 7 months. That's still better than any superannuation that I've seen in the last 10 years. Another mistake that people make is they hold on to stocks for too long while they're going sideways or down. And this is News Corp. It went from $8.42 to $5.63 over 2.5 years. Now, someone will say, well, if you hold it, you still would have made money, and that's correct. In many cases, you do. But you lose the opportunity of making money in other stocks while it's going down as well. See, while News Corp dropped 40% in price there, National Bank went up almost 200%. Commonwealth Bank went up almost 300%. So by buying and holding throughout all that period, not only have you not made as much money, you've lost the opportunity to make money in stocks that are going up. Here's another example. Telstra. Big mistake, people holding on to stocks while they're going down. See, this is where Telstra 2 came out, right here. You know now, from what you've learnt in the last 20 minutes, there's no reason why anyone should have held that stock down there, is there? It was in a downtrend. In fact, Telstra has been in a downtrend for most of the last 5 years. Someone asked me recently, only a few weeks ago, should they buy Telstra? And the stock is just heading south. It's in a downtrend still. Even today, it's still in a downtrend. Doesn't mean to say it can't turn around tomorrow or next week or next month, but it's too dangerous.